Hi everyone, welcome to my YouTube channel. My name is Tabitha. Today we are going to talk about investors' need. So what are the investors' need? Always talk about consumers' need, but what are the investors' need? If you're new to this channel, please subscribe for more videos and I will appreciate your support. So investors' needs. So we have so many needs in life. We also have wants, but needs are things that we cannot do without, and they need to be the priority. So most of the time, our needs supersede wants. So, and they are the most important thing that we have to put as a priority. So for us investors, we need lower risk investment as we approach retirement, which means in the retirement, there are things that we cannot do without. So we have to really manage our investment so we do not lose money or we have to start over again. So lower risk investment are required as we get older. So now let's look at all the needs that we need as human being or investors. You are investor who is living life. You have needs, you have wants. So what are some of your needs? Need for income. So as individual, we have to have employment or business income or inheritance income to be able to pay for our living costs or even saving. So we require this income to meet the cost of living. We have to pay the rent, we have to go on vacation, we have to have food, we have to have clothes. So we have the need for income. The goal for saving, if you have enough to pay cost of living and you have money to save, you have to have the goal where you have to define how much are you spending for your living and how much do you want to save. So let's say, for example, you want to save, then you have to put a dollar sign on that. So if you don't put it, you might end up like just living life and being pushed around until the end, and you end up not saving anything. So you have to be definite. You have to define and assign the dollar value, the amount that you want to spend in a month and the amount that you want to save in a month. So the need of income. So we all need money, right? Need money for cost of living, need money to save for some of the things that are important to us in life. So need of money is the first thing other than other things, right? Everything else follow later. So what happened then if you can afford your living, or maybe the money that you make is insufficient or only sufficient for paying cost of living? What other alternative do you need to do? What do you need to do to be able to afford the cost of living? So if your income is low, so this is where people have to increase their earning potential. Some people increase their earning potential by doing more education and hoping that they will get promoted or maybe their income will be increased. Others will get a part-time job and then earn more income. And then other people, instead of investing more time to do all those stuff, they will prefer to manage their expenses. Instead of spending too much, they manage their expenses, they save the different and then invest and make more money from investment. So which one work for you is individual choice. So you can increase your earning potential or manage your expenses to be able to have that surplus at the end of the month. So needs for investors needs. So investors needs, there's so many of them. We go through them one by one. So the need for retirement income. So as we live life, we tend to grow older and everyone will be old some days and they will need money that will sustain their life as they wait for the last times, right? Income to meet expenses in retirement time. When you retire, you still need to food, you still need clothes, you still need healthcare. In fact, healthcare increase, right? Because as you get older, you tend to have like more serious health issues, so you will need income. So as people are young and they are working time, during their working time, they need to put into their consideration that they need the retirement money, and starting it now is better than later. Income to meet expenses in retirement. Sometimes the income retirement income replaces or supplement employment income, right? So when you have retirement income, but where does your retirement income come from if you're not working? So the need in retirement income could come from different sources. If you were working during your youth time, or maybe you had a business, you had investment. So retirement incomes can come from different sources, and we look at some of them here and we give example. So where are the sources of your retirement income? One of them is the government pension income. So if you're working during your time, during the time of your work days, they will take a pension percentage from your paycheck. This one goes to the government. And then later on, when you retire, they will give it back to you. Private pension incomes, maybe there was like something that you were doing somewhere and you're getting pension for the work that you did before. Investment income. So if you're now doing investment, the people who are investing in their RSP and they are not using it for other purpose. So these people will have that investment income later on when they retire. Personal saving, people who have saving that hand them more interest, and this one, they can use that money during their retirement. So investors needs. So more of the investors needs, there are a lot of investors needs income, retirement income, all those stuffs. So what happened during your retirement? You get the money from the government, you get the money from your private inventions, or maybe you have investment, or you have employment. Some people who cannot afford to retire, some of them goes back to workforce. So employment income also can be a source of retirement income because people cannot afford to retire, so they go back to work. Business income is also another source of retirement income because they could be retired and stay at home, but they still get salary and dividend because they are founders or members of that business, the owners of that business. So now let's look at more investors' needs as we go along. So most investors need, what are other things? We have looked at the need for income in general, and then the need for retirement income during your retirement years. So now need for tax efficiency. This tax efficient things, people don't take it serious, and the years goes back as they lose their money to the government. The money that they are entitled to, they don't claim it because maybe they don't have the information or they don't know how they can claim it. So when you are spouse can split their income, and this way they can reduce their income tax. Maybe more detail later on if we talk about income splitting. Tax credit. A lot of people don't claim their tax from the government. Maybe some other people, they do charity. So if you don't claim that, then you're not going to get the tax credit. Some people may contribute to the RSP. If you don't claim that, the tax credit, you're not going to get the money back if you don't not claim it or present the amount that you you contribute to your RSP. Other people, they do business, but they are also entitled to claim some of their business expenses. If you don't claim that, that money is gone. So we have to be careful, like look at this. What are some of your needs? Where are you leaving your money to people? So the need for emergency fund. This emergency fund will help you save money. So when there is emergency, you're not going to borrow money and pay higher cost of borrowing. So an emergency fund is a readily available sum equivalent to minimum of 3 months living expenses. So this will help you save money. Emergency fund used for unexpected expenses. They replace income that is suddenly lost. If you lose your job, or maybe you lose a certain income that you used to use to pay for living expenses. So that one will be replaced by emergency fund for that time period. So this will also help you save on your credit card interest. So if you have emergency funds that you use to pay for your unexpected expenses, or maybe a sudden loss of income, and then you don't have to borrow money at a higher cost. Emergency fund must have a higher degree of liquidity to be available as needed, right? So if you keep it as cash, maybe put it in a high interest account, so you can hand something on it as something happened before anything happened, and then you use it. So it's really good to keep it at a higher degree of liquidity. The next things, more needs, investors' needs. So you have to have the emergency fund at all costs, because you never know, life can change anytime, any minute. Need for credit proving. So people, if you want to invest in assets that give you back the money, you might not have the cash to pay it up front. So if you want, you will have the need for credit proving that you can be able to pay back the creditor the amount that you owe them. So you have to put that into consideration. How much debt do you have, and what do you need to do to repay back your debt, so that you have that credibility? So if you are looking for an opportunity, you will be given that opportunity, because they know your credit is good and you're someone who is good at managing your money. A creditor is a person or a company that is owed money by another. The creditor has a right to obtain repayment. Investment can be seized if the debtor cannot repay back. So be the investor that know exactly what is required of you to have a good credit score. So if you have a good credit score, you will be able to take opportunities that come along your way. You will be in a position of using other people's money to make yourself a portion for wealth, or grow your wealth using other people's money. So more credit proving is very important, especially in the Western world. Yeah, most of our living they revolve around credit, everything credit, everything credit. So you have a good credit score. Need for liquidity. The need for liquidity comes hand in hand with emergency fund. So if you have some investment that are liquid, and then you will be at a good position of not really trying to sell your asset at higher cost. So liquidity is a measure of how easy a person or a company can access cash at a lower cost. This includes converting asset into cash, right? It doesn't have to take too much time, too much money to be able to access the income that you want when you need it. It takes care of emergency situation if you have some sort of liquidity as an investor. So let's say all of a sudden you get sick and you have the cash to take care of the medical condition that you have, and then you don't have to pay so high costs to sell your asset, or maybe going into credit cards and borrowing money that you don't even have because maybe you're sick and you cannot work. So need for liquidity is a very important point, and investors need to put that into consideration. They have to keep some of the investment liquid so they don't have to incur higher costs of wanting to get cash to take care of some emergency situation. Need for estate planning. Other people have the desire to leave inheritance, whether to their children, to their families, or to the charity. So these people are always organized to talk to their advisors to make that estate planning. And when thing happened, they die, and then that money will be given to the right people. The net worth statement is very important to show asset available for inheritance, right? Some other people can use cash flow to see how these assets are being accumulated and the rate of which they are used. So estate planning is very important. If you have it, make life easy when things happen, you die, and the company will know where to take your money, who to give the money that you had already accumulated during your lifetime. Sometimes if you die and you don't have any estate planning, what happens is the company that owns your asset will give the money, put your money into your estate, and the government will see if you have debt, they pay your debts, and then maybe give it to the family just like that, because they don't know where to direct it. Cash flow statements show the rate at which assets are accumulated and the rate at which they are used. So number 8 could be something important to many of us, like people who want to participate in charitable giving. So charitable giving, you're helping society. You want to put the need of others in front of yours. So other people can give to cancer research. This individual, maybe they have been affected by the cancer, or maybe they just want to help out, need to create a scholarship. So a lot of people acquire their higher education through scholarship, and this has really developed countries and societies, communities, because somebody has money and they want to use it towards this purpose. So need of scholarship. So investors needs, the last point is that people, investors have to have the need for diversification. So diversification is very good, or charitable, with still need for charitable giving. So the thing with charitable giving, so if you are giving money to charities, the government will also really reward you. So a taxpayer can deduct 75% of his income as a donation and receive the tax credit corresponding to the amount of donation and his marginal tax rate. So the amount that you will give out and the way they will calculate it, and they will give this back to you, right? Which is good. It's like some sort of appreciation that you are helping us build the society. So let's reward you. Number 9 is investors' needs. So this is the need that is very important for people who are doing investing. Why do you need? How do you manage your risk, right? So risks can be managed through diversification, right? So the need for diversification for an investor is a very important one because it help you reduce the risks. So lack of diversification open up the possibility of risk and potential losses. So you are investing in this, you're investing in this, but you are not diversified. If you're not diversified, you are prone to losing your money or having that high risk. So GIC investment have the risk of lower return. So some people who just like they have the money, so they decide, let me put it in GIC. You put it in GIC, and over the years, your investment is now growing. You're just handing a small amount of adding on that. How do you lose here? Because your money is now growing. Your buying power of your money is lost. So your $100 that you put in that account 2 years ago cannot buy you the same amount of life that you want today. So loss, risk of lower return. There's no growth, so you lose your money buying power. So that is it. The investors need of diversification. So you need to be very careful when you are investing. Diversification is really good. You have a place where you put your emergency fund, a place where you put your risky investment, a place where you put your interest investment. You just be diversified. Need for investment management. So some people, based on your level of financial literacy, you might need help from a professional to help you manage your investment. Some people who have little of financial literacy might make wrong decision and then put themselves in at risk of losing money. So if they can either build their financial literacy understanding, or they can get help from professional who already have the knowledge of managing money. So when they are determining or making investment decision, they have to look at the age. So age will determine what type of investment are you going to put your money in, how much time is left for you. And people who are older will choose a lower risk investment because they do not have time to keep losing money and hoping that they will increase their profit later. Risk tolerant. Some people who have a very low risk tolerant cannot really invest in a high and risky investment because they will be the victim in this situation. Because if they see like they cannot hold the downtrend of the investment, they might end up leaving the market and lose their money. Objective. Degree of financial literacy, yes. So based on your understanding will help you end your investment journey by knowing how to tolerate risk. Number two, doing your diversification, knowing how to read your cash flow statement, your net worth statement, knowing how to re-evaluate investment. So those things are very important. So this bring us into the last point of investors need. And if you're new to this channel, please subscribe for more videos.